Quick check of the markets. You can see we're in the green across the board right now, on pace to hit more record highs. In fact, the Nasdaq is on pace to hit its 13th straight day of gains. Right now, up about 1.5%. The Dow up over 1,000 points. The S&P gaining about 1.25. The small caps, the best performer, up over 2%. I think really this is what we have to start with. Jenny, you're right here to my left. We're seeing these moves in the markets. We're seeing the Nasdaq on a 13-day winning streak. We're seeing big upside moves over this month. Is what we're seeing today when it comes to Strait of Hormuz, or we believe that we're seeing. We're going to get more developments from our Megan Kinsella coming up in just a second. Wasn't it already priced in? I mean, isn't that what the markets were saying, that they believe there's going to be a near-term resolution that will be very favorable? Isn't that what this 13-day rally on the Nasdaq's about? Isn't that what the upside moves on the S&P are all about?
Yes, I think it is. And this is where I'm having such a hard time reconciling this short term, which I've joked with my clients. The outlook to me for the very short term is cloudy with a chance of meatballs, where it's just cloudy out there and meatballs might start falling from the sky. For all you parents out there who read the book to your kids, you'll get it. But it is cloudy out there. And what the market has priced in, I think, the best case scenario. We are not even close to dealing with reverberations that may or may not come from supply chain disruptions. I mean, I was listening to the radio the other day, and they were talking about rice production. And right now, apparently, there's an oversupply of rice, but fertilizer isn't getting to Asia, and the rice growing season is starting now. If it gets there in 2 weeks, maybe things will be okay. If it doesn't, things will be worse. So there's this really tough short-term outlook going on. In the longer term, I think things are pretty good. In the longer term, you can really count on 16+% earnings growth. I love the fact that the multiple actually contracted on the S&P by 10%, moving from 22 times down to 20 times during the quarter. Things are okay in the long run, but it's this battle that's out there that's hard to digest right now. And even within that, Frank, as an investor, I think you need to be really, really granular. So I don't think it's the time to say, like, oh, buy Mag 7, everything's better. No, suss out all of those 7. I don't think you say buy energy. You can't even do that. And look at energy today. But things like midstream energy, and in that space, they're okay, whereas companies that have direct fossil fuel exposure that ran up 20 and 30 and 40% in the last month, they're really getting hit hard. So no industry can be looked at broadly, I don't think. I think the short term and the long term offer two very different outlooks, and it's tough to be an investor right now. All right,
so Jenny, you're trying to suss some things out. Jason, I want to come over to you. I'm looking at the S&P up over 9% just so far this month. Also, the MTUM ETF, Momentum ETF, up over 14%. So the momentum's returned to the markets. I mean, it shouldn't just be, hey, let's just go. Let's just go. Do you have reservations about where we're at right now and the potential for a pullback?
Of course, without a doubt. I mean, too far, too fast is definitely a big deal for me, as we've seen, to your point earlier, Frank, on 13 days in a row, the NASDAQ kind of running highest numbers we've seen since the early 90s, right? So I think that is definitely room for concern for me. I think the other piece for me that plays out is just the narrow breadth that we're seeing, right? You're seeing, obviously, the S&P dramatically outpace what we've seen in the RSP, you know, the equal weight, the cap weight for the equal weight is definitely a story for me. I don't think that's healthy going forward. But what I will say from a positive perspective is clearly what's going on with earnings, right? The earnings picture, the earnings picture is very strong. You know, revisions continue to go higher, and I think that's going to be the story, obviously, that I'm focused on going forward. But this move, although we're enjoying it for our clients as investors, is a little bit of a concern for me.
All right, Amy, I want to come over to you. BTIG's Jonathan Krinsky out with a note. I'm going to read it in part. Still bullish, but he says a tactical pause is likely. He goes on to say he doesn't think that we need to have a big price pullback on the indices, but with caution chasing strength today. Would you chase this rally at least today, or would you give it some time to settle? We're just showing some of the headlines right there. Again, our Megan Kinsella is coming up. Iran says the Strait of Hormuz is open. The U.S. and the president say that the naval blockade is still going on. So there seems to be a bit of friction still.
Yeah, I wouldn't necessarily chase here. I think we're going to get a lot of news in the next few weeks with earnings. We'll see how they go. Their expectations for earnings are very high. We haven't seen great reactions even to a lot of beats. So I would be a little bit more cautious. And putting everything in perspective, remember, we started the year at 6,800, 6,900. So being at 7,150 doesn't, you know, if you just look at the two endpoints, it hasn't been a huge rally. And we were sort of around these levels last October. So I think we should everybody just take a step back. It feels very good. We've had this really nice run very recently, but we're going to get a lot of data, and there's still a lot to parse through.
Yeah, by the way, Barclays out with a note saying that investors seem to be pricing in a lot of hope, Steve Weiss. I know you to be one of the most hopeful investors I've ever met. On a serious note, what do you make of this? Barclays went on to say a lot of FOMO out there in the market. Do you think that's what's driving all this? Is this FOMO, or is this a real continuation of the bull market that we saw prior to the Iran conflict?
Yeah, first of all, I got to apologize to Jace for the bell ringing. They thought I was about to talk.
That's right. That's right.
Look, this is, in the last 40 years, you've seen the quickest move from being oversold to being overbought. So typically when that happens, there is a pullback. So, you know, I'm not betting on it. I'm not adjusting my positioning, but should be aware of it. And why I am conscious of it is because I still have some cash, not a lot, but I'd use that opportunity to buy in. This market, look, it's not a market any of us have ever seen. It makes no sense. It's too easy. When markets are too easy, that's when trouble starts brewing. And you can't believe the headlines. You can't believe anything coming out of headlines because there's one narrative coming from Washington. There's another narrative coming from Iran. You can't believe either one of them. So basically what you've got to do is stick to fundamentals. And if you're a long-term investor, stick to that, block out the noise. Today, you know, I mean, we're seeing a big move in the market, 1.5%, almost 1.3%. It's not normal for those moves to happen every day. It's just not. So I'm still optimistic on the market because these markets just want to go up. And markets generally do go up. If you go back through time and you take a look at every major decline, including the crash back in the 20s and 30s, we're a lot higher. I mean, it's such an obvious thing, but it's true. So again, pick your spots. You take a look at some stocks that get dislocated on a short-term basis. Those are good opportunities to pick them up. And we've seen that with Meta. We saw it at Microsoft. There's one today we're going to talk about as well. So that's how I'm playing it. I'm not getting, you just can't jump on the highs, you can't jump on the lows. You just got to be very even keel.
All right, here to help us parse some of these conflicting headlines, we're going to bring in our Megan Casella live in our D.C. bureau. Megan, we're seeing two conflicting statements here. Iran says the Strait's open. The White House and the president says the naval blockade continues. What's the very latest?
Frank, you're right that there are a lot of moving pieces here and a lot of conflicting reports. So let's lay out a little bit of everything that we've learned over the past couple of hours. The most recent is that President Trump has been making calls to reporters, a number of calls, where he claims that a deal is almost done. And in that deal, he says that Iran has agreed to suspend its nuclear program indefinitely and that it won't get any frozen funds in exchange. He's presenting this sort of as an almost done deal. He says there will probably be talks this weekend to wrap everything up. And he said to Bloomberg, most of the main points are finalized. He says it'll go pretty quickly from here. But I want to emphasize we have not heard any confirmation from the Iranian side on this. This would be a major capitulation from Iran to agree to all of this. We don't know what they'd be getting in exchange or why they would agree to it now. So we don't have any confirmation that Iran has agreed to the points that the president is laying out. Now, in the meantime, we're also getting these conflicting headlines over the state of the Strait of Hormuz. The president said on Truth Social earlier this morning that, yes, it's reopened, but that the U.S.'s naval blockade remains in place. And the latest we have in response from Iranian state media is that despite what the Iran foreign minister said early this morning about the Strait being reopened, this Iranian state media is now saying that as long as the U.S.'s blockade is remaining in place, then the Strait is not reopened, that it will require coordination with Iran's military, that if the blockade is in place, they will not be reopening the Strait, Frank. So a lot of pieces there. The president claiming that a deal is almost done. No word yet from the Iranians, so we'll see what happens throughout the day and potentially with talks this weekend.
Well, Megan, we know that you're going to stay on top of it. Our Megan Casella live from our D.C. bureau. A lot to kind of go through right there. Amy, I want to come back over to you. So Megan mentioned some of the conflicting headlines right there. We also have some other headlines about the administration wanting U.S. oil producers to drill more. Right now, I'm looking at oil. It's for WTI. It's trading about $83 a barrel. It's down about 12% today. Does this lower price of oil, does that change your view of the market in a meaningful way? Do you believe it's sustainable?
Well, what's really interesting is if you look at the 5-year strip today, it's virtually flat. So it's the near-term price of oil that went up a lot. The long-term prices basically didn't move that much, and now the near-term's coming down a lot, and the long-term prices again are still stable. We've been bullish on oil. We've been overweight energy. It's been a great. It's helped performance obviously in the short term. We think it has nothing to do with the Iran conflict. It just has to do with the massive fiscal stimulus that you're seeing from almost every place. So we do think energy, the long-term outlook for energy is good. We just added to Schlumberger. We think countries will look to diversify from the Middle East. That requires more exploration. That requires more oil field services. So we do think there are opportunities to make money here. We did trim a little shell that did very well with the conflict.
Yeah, we're going to get to your moves in just a bit, but I want to focus on technology right now, the tech sector.